Hello, welcome to LCG's preview for the week ahead. I'm going to discuss the beginning of third quarter earnings season in the US, rising government bond yields, and China returning from a week-long holiday to a weak Chinese yuan. But before that, I'll run down the biggest events in the economic calendar. So on Monday, China releases its foreign reserves for September. There's little of note on Tuesday, but on Wednesday we see UK industrial production, UK third quarter GDP and US producer prices. On Thursday it's US CPI for September. On Friday the IMF meeting begins while China announces trade data and foreign direct investment. Moving on to the top corporate results to watch this week. Virtue Motors report half-year earnings on Wednesday. WH Smith and Uniqlo owner Fast Retailing report full-year earnings. On the Market report half-year results, and Delta Airlines and Walgreens Boots report their Q3 numbers on Thursday. On Friday, US earnings season kicks in, unofficially at least, with top US banks, JP Morgan Chase, Citigroup and Wells Fargo. They're all reporting third quarter earnings. So on that topic of third quarter earnings, it's obviously these bank results which come into focus. So typically we talk a little bit about those when we talk about the beginning of the earnings season in the US. Particularly of interest at the moment, high interest rates plus a strong US economy is naturally a very good combination for banks. And we have heard numerous reports of high business confidence, business lending picking up, lots of mergers and acquisitions taking place. So all this should be good for banks as a whole, although the sector's still not getting too much love from analysts and still valuations lower than they have been on a historical basis. So potentially some room for outperformance from these banks if they can deliver in these earnings season. Overall, the S&P 500 is looking for 19.3% earnings growth. That's still obviously very impressive. It's down slightly from the expectations in June when it was 20.4%, but that's pretty marginal. And overall, you can say our expectations are very strong, potentially leaving more room to miss those high expectations. That will happen at some point, but that's not our default expectation. I think generally, earnings are supportive of stock markets. That's not to say other things can't take over to send them lower, but earnings generally a reason to be bullish the stock market. As far as specific sectors, analysts are optimistic on energy, obviously understandable given the rise in oil prices, and healthcare, and we've seen those healthcare stocks push pretty considerably higher. Also materials, less optimistic as a general rule on consumer staples and utilities. Obviously, they're the safer areas in the markets which typically don't perform well when you're at record highs and looking at higher interest rates. Talking more specifically about those interest rates, bond yields are obviously on the rise. What technicians will particularly be interested in is the potential double bottom in 10-year US government yields. We've seen a breakout above potentially the neckline of that pattern. That's pushed government bond yields up to 7-year highs on a 10-year basis in the US. So it's interesting that it's the long end of the yield curve now that's also pushing higher, not just the short end like the 2-year. Switching gears to China, onshore traders will return from a week-long holiday this week. If they are going to take their lead from Hong Kong, there was around a 4% drop in Hong Kong stocks last week, at the time of filming that is. So China likely to start on a difficult note. Emerging markets have been under pressure and the yuan has been pushing up to that key 6.9 level that's been resistance against the US dollar on a number of occasions on that dollar-yuan pair. So we're looking for potentially further yuan weakness and maybe looking for more emergency measures from China's central bank to combat that weakness in case it gets to some unstable levels. But generally this strong dollar, which has pushed to a 6-week high when you're talking about DXY, that's a difficult environment for emerging market currencies, including yuan. Well, thank you very much for watching. Good luck with trading this week. And if you want to see these videos as soon as they're released, please follow LCG on YouTube and social media.